Welcome to this week's live strategy session. Thanks for joining me. Great having you with me for another day of going through the charts, looking at the technical analysis, talking about the possibilities around all the markets, the ASX 200, the US markets, onto the strategy session stuff for the members, gold, copper, uranium, all those interesting things. Lots of stuff going on, lots of movement in the markets to talk about. So it should be a pretty interesting show. Also, any stock codes that you have for later on, get them ready. We can go through, pull apart the charts, look at the technical structure for those as well. Now, of course, everything today, general commentary only, doesn't take your personal situation into account. Having been through all that, let's jump into that first chart for the week. So to start with, we've got the ASX 200 up here on the screen. And so the ASX 200, it started the month at an all-time high. It's now down around 3% and starting to dip below the 50-day moving average. So is this pullback a point of concern? And what are the chances that it turns into something bigger and we see the market come away? Well, as we do each week, I've got a range of charts to go through. I want to provide some context around what we're currently seeing in the market and then consider some of the possibilities. And of course, we're also going to look at the S&P 500 and the other US markets as well, other US indices. So lots of interesting charts to go through. First of all, though, let's just start with this ASX 200. And I think the question is, what makes this pullback? So this pullback we're just having over the last couple of weeks, what makes this different from the one we saw in October, the one we saw in August, or for that matter, the ones we saw in March, February, and January? What makes the current one different from those previous pullbacks? And I think the answer to that is, well, probably not that much. They all began from all-time highs or close to all-time highs, and they all reported, they all retraced back to around the 50-day moving average. So from that perspective, there's really not a great deal of difference between these previous pullbacks that we've seen over the last year and what we're currently seeing. And the thing is that they all follow the same pattern. The market rallies and then it pulls back. That's the normal course of a rising trend. I think there's a tendency for people to see these pullbacks when they periodically occur. They see the pullbacks and they start to worry about, is that the top? Is the top in? And at some point, of course, there will be a peak. One of these high points does then become a lasting high that leads to a longer and in a more lasting decline. Have a look at a few of those in a moment. But here's the important point. The market typically doesn't reach an all-time high and then accelerate lower. There's often a topping process. Let me show you what I mean. So let's start with the last major high point, and that was over here in September 2021. Let me just position this properly. So yeah, last major high, September 21. And the ASX 200 then spent 8 months. Building this. There was this topping process that it went through. It took 8 months, and it wasn't an easy period to manage. There was plenty of uncertainty. We had periodic dips below the averages that quickly rebounded. Had a larger sell-off in a little bit later in that period, but there was a structural change. We could see the structure changing in February through to May, and that was a period where there was considerable consolidation below declining moving averages. And this was the time, I think, where it would have been a case of reducing exposure, having been less active with buying. That's sort of like how we can see that structural change. Then we've got the COVID period. Well, this was entirely different, and this was an exception where the market did go straight down. Yes, that could happen again, but I think that's a long odds bet to talk about markets that are just going to completely collapse. not what we usually see at market tops. And then we come over to the 2015 peaks. Have a look at this peak in 2015. And again, it's that same topping process. Prices didn't reach their peak and then the floor just dropped out beneath. This was a 1 year period where the market came back, but it didn't all happen in one day. And what we see happen, prices move from above the moving averages to below, and then there's consolidation beneath the moving averages, and then it starts to accelerate to the downside. But there's a clear change that we can see happening on the charts prior to things getting particularly unpleasant. I'll show you one more, and that is, I'm going to go over to the GFC. This is back in 2008. And again, we see this whole process unfold. Now, this one happens quicker, but it's the same pattern. Markets make a high. They come back, they get below the moving averages, some consolidation beneath the moving averages are turning, and then it breaks and starts to accelerate to the downside. But there is warning in terms of seeing that process, seeing that structure start to develop. As I said, the GFC one, it's faster, but you still got that same process, the same signs to look out for. Now, there are also other periods. There's like shakeouts along the way. Like there was a shakeout in 2007, met some of those criteria I was just going through, but it didn't turn into a larger decline. There was something similar over in December 2014, where again, market goes from below to above, there's consolidation, but it doesn't then fall away. So the market doesn't make it easy for us. There are decoys along the way that may look ominous, but then don't develop into a bear market. But we can discuss them another time. The focus for today is very much on the current 3% pullback. So let's just go back to current time. And the focus now is on this 3% pullback. It's a price action that we currently have. At this stage, the odds favor that this is a routine pullback to the moving averages, just like we've seen many times throughout this year. If the structure changes and prices do fall below the moving averages, like we were going through in those examples, if the structure changes and we see prices below the moving averages, consolidating below moving averages that are starting to roll over and decline, that's another situation. But we don't have that at the moment. And I think until that happens, I think it's a case of observing the rising moving averages, the 50 and 100-day moving averages continue to rise, and that remains a bullish structure. And I think we should be positioned according to the price action that we currently have, and that is the bullish structure remains in place. Now, let me jump over to the equal weight, the ASX 200 on an equal weighted basis. This is an interesting one as always to look at because, of course, the ASX 200 is market cap based. The big stocks have the most influence. When you look at it on an equal weight basis, like we are now, each of those 200 stocks have the same weighting. Again, we've got prices coming back towards the moving averages. One possibility, I think, is that we see a range develop, and we already are seeing the basis of a range over the last month. You might remember I was talking about that scenario a couple of weeks ago. I was saying, oh, look, I think maybe we see a bit of a range start to develop. Didn't play out the way I was thinking. I was thinking a couple of weeks back, the market might have come back to that 100-day moving average. Didn't work that way at all. Started to push up to a new high. Saw that further strength. But maybe that range scenario is coming back into focus now with the market coming back below the 100-day, below the 50-day moving average. It could be a case that we see some more weakness towards the 100-day moving average and then some consolidation below the recent highs before moving higher. So like something we could see is like if we get consolidation within a range, and then after some more consolidation, we start to see the market work its way higher. So there just could be more consolidation to play through before we can look at the possibility of the trend re-engaging to the upside. I think an important support comes in at around 1,930. Actually, it's around here, around 1,930. Let me just draw that in. It takes in these previous highs and the recent lows. So around here, this is, you can see these high points from several months ago and the recent lows. So that comes in around 1,930. Like I said with the ASX 200, this remains a bull market until the price action proves otherwise. There's always going to be pauses. There's going to be consolidations along the way. And I think the odds favour that this is another one of those consolidations in an ongoing bull market, particularly while prices are remaining above key supports like moving averages and this structural support I've just been speaking about. While we're on the good side of that, I think our default position should be this is a consolidation, not a turning point. As always, though, I'm using wide trailing stops with my positions because we don't know. At some point, highs will be made and longer declines will occur. So this is what a trailing stop's all about, is to try and see off the consolidations whilst it's reasonable to do so. But if the market gives back too much ground, gives away too much, well then the trailing stop can get you out, takes capital out of the market, puts it on the sideline, protects it while conditions are possibly unfavorable. But of course, that's not the conditions we have at the moment. Now, if you're getting some value from this, please hit that like button. Leave a short comment, just, hey, thanks for the video. It tells YouTube you're watching. YouTube shows other people. Helps me heaps. Please do those things. Click the like and short comment. Now, I'm going to go to the US market now. I've got the local and the US small caps after that, as well as the commodities and any stocks you want me to have a look at. So we'll do that in a moment. First of all, though, let's go over to the S&P 500. Now, I'm starting to think the S&P 500, I think we're starting to see some signs that maybe the S&P 500 is starting to lose some momentum. Not so much from an overall trend perspective. From an overall trend perspective, I think this remains very much bullish. Just from a shorter term perspective, I think we could be nearing some consolidation. I'll take you through what I'm thinking. So at first glance, when we look at this, the trend is clearly up. We've got 50-day, 100-day moving averages, both continue to rise, prices above the moving averages. So there's no problem there. And I think that remains the most important feature on this chart. But when I look at the S&P 500 on an equal weighted basis, so we're talking about equal weight in the ASX 200, we can do the same with the S&P 500. Because of course, this is dominated by those big tech stocks, the Nvidias, the Microsofts, Apples, etc. They got the biggest pull in the market. When we go to an equal weight basis, they're just 1 out of 500 stocks. So we get a better picture, I think, of what the overall market is doing. And when we do look at this on an equal weighted basis, prices have been pulling back for the last 2 weeks. Similar story when we look at the Dow. I'll just quickly go to the Dow Jones Industrial. You can see again, prices have been pulling back for 2 weeks. Yes, and now let's go to the S&P 500. That hasn't been the case. It's very much been holding around as highs. So coming back to the equal weight again, just jumping through a few charts there. So back to the equal weight. Now, this pullback at this point on its own, it's not a great concern, as we spoke about with the ASX 200. Pullbacks are a regular and healthy part of bullish markets. We shouldn't be worried when we see a market pull back 2, 3, 4, even 5%. It's a normal part of the bullish cycle. And I think we need to have strategies to manage that. Otherwise, we every time the market pulls back, we might be inclined to sell and jump out of the market, fearing it's going to be something worse. And I think one of those management strategies, it's just being mentally prepared for pullbacks, understanding that it's a routine part of the bullish cycle. You get pullbacks. You understand that, you're more inclined to be able to see them off and use those strategies to give them room and stay in. So far, the S&P 500 has been resilient to this decline we've had in the equal weight. But I think with a broad section of stocks pulling back, I think that means we should be prepared for some consolidation in the S&P 500 as well. I think this equal weight, I think the S&P 500 equal weight is a great way to get a feel for the broader market. because it does, as I said earlier, it removes that influence of a handful of big tech stocks. Now, another indicator that I've been keeping a close eye on, it's this one here. It's the percentage of S&P 500 stocks above their 100-day moving average. So I think it's pretty self-explanatory by its name. So it's giving us a percentage down here on the on this right axis, and when you have it varies as the number of stocks in the S&P 500 move around their 100-day moving average. So what I've been watching with this is I've been watching it consolidate over the last month around about the high 60%, so around 69%, give or take a few percent. That percentage of stocks around let's say around 70% of S&P 500 stocks have been holding above their 100-day moving average. What's happened in the last few days is that this has now started to break lower. So there are fewer stocks, a smaller percentage of stocks above their 100-day moving averages. It's dropped down to 58%. Last time it was down at 58% was back in September, in early to mid-September, and that was at a time when the S&P 500 had just had a 4.5% pullback. So we tend to see weakness in this indicator when there's weakness in the S&P 500. I think that the declining number of stocks above their 100-day moving average is a short-term weight on the market, particularly if this indicator continues to trend lower over the next week or so. So don't be surprised if we do see some. If we do, going back over to the S&P 500, don't be surprised if we do see some weakness develop over the short term, maybe only over the next week or two. Maybe there's some consolidation approaching. I think the signs are there to suggest that maybe that next consolidation isn't too far away. Now, I'm going to jump over to the US small caps next. I've got the local, the Aussie small caps to go through as well. Copper, gold, oil, uranium. I've got a stock I want to show you. I want to take all your questions and stock ideas as well. Have a look at those charts. But of course, that wraps up the free section. If you're not a Strategy Session member, there's a link below. Click it. Come on board. I think there's lots of stuff that you'll like inside, and it doesn't cost you very much at all. That's the best bit. It's a very inexpensive way to get a whole lot of intel about what's going on in the markets at the moment, and hopefully a few ideas which you can take action on. So let's start with the Russell.